Hello traders, welcome back to another video. So on today's video I'm gonna do CAD JPY and Euro USD, guys. And the reason why I'm doing this CAD JPY, firstly just because I took a loss on this one, but like it was a lesson for me, but like the loss was very huge, guys, but like it's okay. But like, as you know, we learn from the markets each and every day. Even if you think that you have mastered your trading strategy, but like sometimes you get caught up in the sauce whereby you don't understand what's going on, and then you take impulsive decisions whereby they lead you to taking a big loss, guys. So learn from the losses that I have made, and then as you can see here, this is the 4 hour time frame, guys, and then as you can clearly notice, the market is pushing to the downside. So this setup was also shared like on with a shot whereby I posted a shot on YouTube, I think on YouTube and TikTok also, but like it's okay. So let's look at the structure. As you can see here, we had your high around this point. Check this point here, we had the high, then we had the low, then we had a lower high, then we had a lower low, lower high, lower low, guys, of which the market is pushing down, obviously. So the break of structure happened around this point, and then the reason why I'm mapping out structures firstly is for you to practice each and everything that I'm doing here so that you can apply it on your charts, guys. Now break of structure, break of structure right there, market push down, 3 candle pull back, break of structure within this point. So now we need that 3 candle pullback so that we can confirm if it's our low or not, guys. Now, so as you can see here, we already had like 1 candle, and then the others just flatlined, as you can see from that point. So which means that this is not your low, this is your lowest point. As you can see, we had the 3 candle pullback like I told you. So which means that this is your highest point and this is your lowest point in this market here. So what I was seeing also, guys, was the structures and also the liquidity, guys. As you can see here, we had liquidity equal highs right there, relatively equal highs. Then around this point we also had like relatively equal highs, guys, but like this one was just a bit messy whereby like I got caught up in the sauce, to be honest, whereby I just anticipated like the money the outcome, guys, the money outcome of the overall trade hitting like my overall TP, of which it's this one here. So do not focus on the money side of things, guys. Just focus on the skill. Look at what price action is telling you, just because on this one price action was telling me like something different, but like I decided not to listen, just go in on the trades. But like it's okay, guys, it's okay. It's okay, I learned from the mistake. So as you can see here, we had the liquidity. Then if you try and refine like this overall structure, we can refine it to this one here. This is the order block. As you can see, we had the buy to sell, and then we also had this fair value gap around this point. So the market was going to mitigate like areas of imbalance before we can get like those nice selling opportunities. So we mitigated that area, as you can see from this point. I think it was like in the morning. I think it was in the morning. Let me check the 15-minute. So the structure that I was trading was this one. It's just that I don't have like my cutting option whereby I can cut price action, but like the structure that I was trading was this one, whereby we had this high, low here, then we had a high, low, then we had a higher high, then we had a lower low, of which this is the overall structure that we had. As you can see, this is the break to the upside, just like that, break to the upside, another break to the upside, just like that. Then the market pushed to the upside a bit, then dropped to the downside, which means that this was our overall change of character, just like that. Then after even the change of character, guys, what I noticed was that this is our high, this was our low right here, right, guys. So we are expecting a clean pushback to hit an area of supply around here so that we can look for sales, obviously, guys. So as you can see, this is the golden zone around this point so that we can look for selling opportunities. So I took sales around here. I went in with big lot sizes around this point. Around here, I went in with big lot sizes, took sales, and then the market dropped to the downside. And then after it dropped to the downside, what I saw was that we had trendline liquidity around this point. So this trendline liquidity gave me the itch, guys, whereby after even this break, I went back to my trading I went back on my trading plan whereby I continued to take sales around this point. So the market pulled back. So whenever it pulled back, guys, that is when I got taken out. And then I'm gonna ask you a simple question: why did I get taken out on this one? And something that you might understand is that liquidity happens after. You can notice it after, not before it happens. After it happened, then that is when you can see or spot liquidity. And then I was not on the charts also, guys. I was not like on the big screens like this. I was just looking at my phone, doing my things outside of the charts. And then that is a bad idea. Whenever you're trading, guys, make sure that you are at your trading station and then you're comfortable whenever you're trading. So as you can see here, the market pulled to the downside or continued to take sells, and then it pulled back. So pulling back, we had structure within this point, or we had liquidity within this point, equal highs around this point. And then the liquidity that happened around here, it was shown when the market broke this previous low here. We broke it with a weak creation. So that is why, guys, the market pulled back to take out this liquidity here, just because we didn't break with a body here. If we had broken with a body here, then I know that we would come back to respect the origin of my first entries. So it wouldn't matter if like I entered a lot of entries around here or here, just because the market was going to respect this area and continue pushing down. But like it didn't, just because we broke with a weak creation here. Then we also had liquidity around here. And the last piece of the puzzle was that we had this buy to sell candle, of which it was the extreme supply zone. So that was the overall trade idea that I had, but like it didn't work out in my ideas, just because I was not on the trading station. To be honest, I was just manually trading on my phone, of which that is something that I don't do as much. But like I learned from it. I really learned from it, to be honest, guys. It was bad today. It was bad. I don't want to lie, but like it's okay, guys. It's okay. So as you can see here, and drop a comment of how like your trading went on today, guys. So after that, the market gave us this weak creation, or this area here, of which it swept liquidity, or it was just the liquidity sweep. So you can just say this is an X. Then change of character, liquidity sweep. Then this is our overall break of structure within this point here. And I told you about the setup, told everyone about the setup, even on my YouTube channel, my everything, all my social medias. So we have your high now, and then you have your low. At the moment, what I am looking at is this overall big imbalance here. So we have this big imbalance here, which I like to map it out as IMB. Then at the top of that IMB, we have this buy to sell candle, of which it's our liquidity right there. So now we are anticipating to take sales at this area here. And if you look back, you can obviously see that we have some type of relatively equal highs within this point. Liquidity is very important when it comes to smart money concept, guys. Right? So liquidity right there. Then we have this buy to sell candle, of which it's at the extreme. So what I'm trying to do now is change up like all my rules, but like not too much. I'm just gonna deep into like the smart money concept side of things, whereby I'm waiting for the market to push up structurally, whereby there is no impulsive candle. If there is an impulsive candle, I have to wait for the market to mitigate this point, then get a change of character. Then that is when I'll be looking for sales. And then at the top of the structure, obviously there's no need for me to wait for anything. I just have to take my sell around here with a 16 pip stop loss, and the previous low is my target for around 6%. But like, guys, you learn from your losses. To be honest, you learn from your losses. I don't want to lie. So the last pair that I have here is Euro USD, guys. So on Euro USD, everything is a bit simple. I'm not gonna break out like all the charts and remove everything. As you can clearly notice, the market is pushing to the upside, creating those higher highs and higher lows. So from this point, we had a low here, then we had a high, then we had a lower high, then we had a higher high, lower high, then we had a higher high, of which it gave us a break of structure. So switching to the 1 hour time frame, this is the trade that I missed today. I don't know why I missed this trade. It's because it was perfect. So as you can see here, we had a break of structure. Then the market pulled to the downside, giving us a lower low. So after this lower high, this was an entry, guys. Now, even though this is an internal trade, but like it's perfect, just because we are targeting the liquidity. As you can see here, we have liquidity, we have this area of demand, we also have this area of demand. So basically you're just waiting for an internal change of character, of which it happened around here, internal change, of character, eye chart. Then after having that eye chart, you can take your Fibonacci tool from the high to the low, just like that. But like, there is no need for you to do that. Reason being, the obvious area of interest should be this one here, buy to sell candle, also having this fair value gap here. As you can see here, this is the fair value gap. You need 1 2 3 candles, and the first one and the third candle wick creations do not have to meet. If they don't meet, they create a gap like this. That is called a fair value gap. Then that gap should be accompanied by an area of supply, just like that. So this is where you enter your trades, so just like that. And this is where you take your sells, and then the market pushed to the downside very nicely, guys. That is why I'm saying that there are endless opportunities in the market. So you just have to focus on one. And then the one that I focused on today didn't work out at all, guys. It worked out after, even though like it doesn't matter, but like it's okay, just because you have to understand that the markets, guys, is always moving, and then you take losses, you take wins. And then when it comes to trading like small accounts, there is a win and there is a loss, guys, just because it's a small account after all. So we tapped into an area of demand, as you can see here. We took out this liquidity, then we have this sell to buy candle here, sell to buy. Then this is our order block around here. Then the order block has to take out liquidity, guys, from the previous lows. So as you can see, from this point we took out liquidity around this area here. I'm giving you all the source, guys, giving you all the source here. So if we look closely, we can just say that this overall area here is not clean. So let's see if we mitigate it. So we didn't mitigate that area. If you just remove this point here, didn't mitigate that area. And if we didn't mitigate the area, what we are going to do is wait and see if we can come to this point here, just because the market is always moving, like I told you. And sometimes if we don't mitigate this area, what you need to do is wait, just because this is a break of structure to the downside. So I was expecting a change of character so that we can buy. I was expecting this type of movement to happen. Take out this high, then there is an area of imbalance. As we can see here, we have a gap, then we have a sell to buy candle, of which that is where we are going to buy from, just like that. But like that did not happen, so it's okay. So we're just gonna wait for the market to dip to the downside again, tipping into this area here. So this should be the idea that I have so far, but like I'm not gonna remove this area here just because it may be of interest. It's still of interest up until we violate it. So let's say maybe we take out like that, then we drill down, then we change character, and then that is when I'll be looking for my buying opportunities on Euro USD, guys. And if you have like any questions, drop it in the comment section. And I think you've enjoyed this video so far. Click the like button, subscribe to the channel, that is if you haven't, and I'll see you on another one, guys. Peace and love.